Kotak Mahindra Bank slips over 5% as business momentum slows to a 3-year low in the fourth quarter. Net interest income and profit also below expectations.
SBI also corrects close to 2%. Write-offs rise over 5 times to hit a 9-quarter high. The net interest margin is also at a 15-quarter low.
Oil marketing companies surge as crude prices slump 4% overnight following the OPEC's decision to raise production starting June. Also, the shares of other crude users increases.
Marico surges as the fourth quarter volume and revenue beat estimates. The company has also guided for double-digit operating profit in FY26.
DMart corrects over 2%, now down 2.5% following an operationally weak quarter. The company takes a hit on the margins as competitive intensity rises in the FMCG industry.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And the rate should come up for you on the top of the screen. Well, the Nifty is trading in the green. And I'll tell you what, it's without its star performer. That's the Nifty Bank. That's still on the back foot. But otherwise, the bulls will feel good this morning because the Nifty is up 150 points, Mangalam. Almost moving into the green, the Nifty Bank.
All things considered, it's a very good start. Why does one say that? Because, the Nifty Bank, like you pointed out, is in the red. But, the Nifty is holding on to 24,500, a mark that it had given up from over the last few trading sessions as well. And the mid-cap index, that's doing a lot better. On Friday, we saw the mid-cap index underperform. The Nifty had given up all of its gains, consolidated, at the index level. But there were more stocks that were declining than the number of stocks that were advancing. Turn that around. On a Monday, we have nearly 1,800 stocks which are in the green for just around 644 which are in the red. And among all of that, a bunch of stocks which are doing well. We have, all the auto names. So we have TVS Motors, which has done well. We have, Eicher Motors, which is slightly higher as well. We have Trent. The consumer names are doing a lot better. So we'll keep an eye out on that. And then we have, a couple of these real estate names which continue to do well too. So we have Prestige Estates, which is higher. We have, couple of these Adani Group stocks as well, which are seeking some sort of gains in today's trading session.
And RR Kabel delivered a good set of numbers. The street believes that maybe, in fact, the other numbers as well will be good. Polycab, case in point, the stock is up close to 3.5%, and it's moving on rather large volumes. So I think you should get that one as well up for you on the screen. But let's get in Shivangi Sarda for a technical check. Hi, Shivangi. It's been a while since we spoke. I believe you're heading into a big day. That said, it's a big day for the markets as always. What would you do? The Nifty is up 150 points, running into the same resistance zone. What's the view from here on?
Very good morning, Mangalam and Nigel. Of course, celebrations are around the corner for both the markets. Now, looking at Nifty soaring higher, we've seen that there has been good support-based buying, and nevertheless, there is a little bit of a rub-off at the higher levels. But the put-call ratio has been sustaining above 1, which is an indication that, there are a lot of put writers making a good base here. So we are going for buy-on-decline strategy here. Of course, India VIX is slightly on the higher zone right now with all the geopolitical tensions rising, of course. But overall, bulls are quite active and they are buying even at these levels. We're looking at 24,750 as the next mark for Nifty, with a support of 24,350 marks. Talking about Bank Nifty, we've seen, of course, this has been a star performer from the last 1.5 series. But of course, there is slight bit of a profit taking from the last 1 week after we've touched a new lifetime high territory. But overall, the PSU banks, which had just started to move, they have been holding on to this index. And somewhere there is a little bit of an index management which is happening. But overall, the heavyweight should be back in stance soon. So overall, buy on decline texture would continue for Bank Nifty as well. And we're looking at 56,000 immediately in this index with a support of 54,650 levels.
All right, we take that point. It seems like ahead of the big day, there's a lot of jewelry shopping which is being done, Shivangi, because we have Kalyan Jewellers, which has moved to the high point of trade. You look at PN Gargil, that's higher. Titan reports its numbers this week. We already have the update. That's looking good as well. And obviously, last week was Akshaya Tritiya, so some bit of gold sales that would have taken place out there. also reflecting in the stock price right now. But a big surge is what we're seeing on Intellect Design Arena. That's the one that should come up for you. It's an unusual spike that we're seeing on the stock, up around 5% from the lows and gaining just in the last 15 odd minutes or so, up at the high point. Shivangi, individual stocks, what do you have on your radar?
Of course, Manglam, first up on my radar is Indigo. We've seen that this stock has been one which is very resilient despite the market volatility. Week-on-week basis, we've seen that there has been a good support-based buying. Stock is trading in an upward sloping channel overall at a higher time frame. And even on the daily basis, we've seen retracement exactly from its key exponential moving averages. Of course, crude oil price movements have had an impact from the last two sessions, but overall setup is quite positive. And we are looking at 5,800 as the next targets for Indigo with a support of 5,450 levels. Next up on my radar is IOC, which has been in action. The price volume surge from the last three trading session is adding to the momentum. We've seen that this stock is, of course, well positioned with the major refinery expansion, but there are near-term catalysts which have remained quite positive for this one, lower LPG under recoveries. And of course, there is a lot of, Russian crude intake, which is also getting an impact from there. So overall, stock is quite positive. Even technically, we've seen that the stock has been moving from the last few weeks, and month-on-month basis, we've seen a good recovery from the lower levels. So recommending a buy here. Now, the next targets that we're looking at is 155 for IOC with a stop of 145.
All right, Shivangi, thanks a lot for those calls on the stocks, and wishing you as well as your family and the special guy all the best. I think the countdown is there, maybe 10 or 12 days to go. So for the uninformed, Shivangi is going to be getting married, so we wish her well. Thanks a lot.
And, we wish for a lot of sweets in our newsroom as well once the celebrations do happen, Shivangi. From all of us here, congratulations once again.
Thank you so much.
Thanks for joining in. Well, let's shift focus to our special segment there where we get you a few ideas for profit from Money Control Pro. We have Varsha of moneycontrol.com who joins us to talk about a stock that she's tracking closely. Varsha, take it away.
Today's idea is V2 Retail. It's a value fashion retailer offering a diversified range of affordable products including apparel for men, women, children, accessories. Operating under value and variety V2 theme, the company operates 189 stores across northern and eastern India. V2 Retail focus on price-sensitive consumers in Tier 2 and Tier 3 cities, capitalizing on increasing demand on stylish and budget-friendly fashion. In FY25, V2 Retail expanded by adding 60 stores, increasing its retail space to 20.27 lakh square feet. For FY26, the company plans to open 100 new outlets with 70 to 80% of the expansion in existing market such as UP, Jharkhand and Bihar, while 20 to 30% with target high-growth regions such as Andhra Pradesh and Rajasthan. V2 Retail has consistently posted strong SSSG growth and high revenue per square feet. The company aims for double-digit SSG of 10% over the medium term. As India shifts from unorganized to organized retail, V2 Retail is well positioned to benefit its strong value brand, competitive pricing, effective sourcing and focus on private label offering. The company enhance margins. Investments in back-end technology and inventory optimization ensure scalable and data-driven growth. Valued at 37 times of FY27 earnings, V2 Retail represents an attractive investment opportunities in the mid-cap retail space.
Thanks a lot for that, Varsha. Well, on that note, though, we'll slip into a short break. On the other side, we'll focus on the banking names, Kotak Mahindra Bank as well as SBI. We'll also tell you about Avenue Supermart's numbers. Stay with us.
Just keep an eye on a couple of these broader market names. You have Parag Milk, which is now up around 11%. Reported its numbers over the weekend. Good growth is what we've seen in their operating profits. They've jumped from, 37 crores to 62 crores. And that's reflected in their bottom line as well, which on a low base of 10 crores has jumped all the way up to 26 crores. And milk prices are likely to go higher seasonally itself. The company has informed the exchanges, as have all the other dairy companies. So the milk cycle in favor of all these companies, these stocks doing extremely well. Parag Milk, the biggest gainer among all of them. But the stocks which are losing right now are Kotak Mahindra Bank and SBI. Abhishek joins in to tell us why Kotak Mahindra Bank is down 5% and why, despite decent set of numbers, SBI too is down about 1.5%. Abhishek.
Well, to begin with, in SBI, the other income has actually aided in earnings beat versus our poll. A 19-quarter high with respect to write-off actually aided the gross NPA ratio to be one of the lowest that you are seeing in last 10 to 15 years. Take a look at the P&L. The NII is a beat on our poll. PAT, on account of higher forex income as well as treasury gains, has beaten our poll. So 19-quarter high write-off, more than 10,000 crore in this quarter versus less than 2,000 crore in the previous quarter. That's aided the gross NPA ratio. Net interest margin is at 15-quarter low at about 3% versus 3.01% in the previous quarter. The NII growth rate on a YY basis is at just 2.7%, which is one of the lowest that you are seeing in last 5 years or 20 quarters. Return ratios remain weak, 5-quarter low with respect to ROA at close to 1.7% and ROE below the 20% mark. Slippages, they have been stable largely. A 10-quarter low slippage ratio of 0.41%. CASA ratio has improved for them for the first time in last 12 quarters, coming in at close to 40% versus 39.2% in the previous quarter. Now, loan growth has been at 12% YOY, the lowest loan growth rate that you are seeing in last 12 quarters. For Kotak Mahindra Bank, the business momentum on a YOY basis is perhaps one of the weakest that you are seeing in last 3 years. That has led to NII and PAT being below our poll. Both the NII and PAT versus our poll are on the lower side. Deposit growth was at 11.2% YOY, which is one of the lowest that you are seeing in last 11 quarters. Although sequential growth has been one of the best in last 4 quarters, coming in at 5.4% quarter-on-quarter. Advances growth has been at 13.5% YOY, one of the lowest growth that you are seeing in 15 quarters. That has been impacted by the unsecured portfolio like the microfinance, credit card, as well as the fact that corporate portfolio declined by 4% quarter-on-quarter. Net interest income growth is at just 5.5% YOY, one of the lowest that you are seeing in last 14 quarters. Now, operating profit growth is really weak, just 0.2% YOY, the lowest growth rate that you are seeing in last 11 quarters. Even the core operating profit, that is the NII plus fees minus OPEX, that's been weak. It has declined by 0.9% YOY, first time decline in 13 quarters, and it has declined by 0.3% sequentially. PAT has declined by more than 14% YOY, the highest decline in last 9 years. Subsidiaries, some of them were really weak. Their PAT declined both YOY and quarter-on-quarter. That was for Kotak Mahindra Life Insurance as well as Kotak Securities. Asset quality, 3-quarter low gross NP ratio, while cost to income ratio was at 5-quarter high. Let's listen into the management of Kotak Mahindra Bank as to what they had to say about their Q4 FY25 numbers.
So, Abhishek, clearly there's been an easing of liquidity, which is a good thing from our perspective. Private sector demand has still been kind of muted. But we at Kotak have grown average loans at about 18%, kept good pace with deposits. And it's always been our mantra that we will try and grow our deposits somewhere between 1.5 to 2 times nominal GDP growth. And we're continuing down that path.
So do you expect the loan growth in FY26 to be around the 15% mark?
So it's difficult to say that. It really, what we said, the way I kind of like to temper it is it within that 1.5 to 2 times GDP growth? That is really a risk appetite statement, right? Because if the economy is going at a certain rate and you're growing too fast, then obviously you're taking too much risk. If you're going too slow, you're losing money on the table. So what we like to do is kind of say, hey, if the economy is growing this way, are we growing in that kind of ballpark?
Well, recently many banks have started to cut their saving deposit rates. Also, the fact that net interest margin has been healthy for all the banks. How do you see the net interest margin trajectory in a declining rate scenario?
So, Abhishek, obviously when repo rates get cut, that puts pressure. Some amount of that pressure is offset by cuts in rates. Not only savings, but also in terms of TDs. Of course, TDs take a little bit more time. It's a matter of, fine balancing as to how much you can cut, the speed at which you cut, where you cut, and how you do it. Obviously, NIM management is a very, very important thing for the profitability of a bank.
Any guidance on net interest margin?
So it's hard to, because it depends on how the repo rates kind of move, how often, how many more cuts there are, and what is the quantum of cut. Depending on that, we'll have to respond accordingly.
Well, FY25 for the banking sector as a whole has seen pain in the unsecured portfolio, microfinance or credit cards or personal loans for many of them. How do you see the trajectory with respect to, asset quality panning out for you going ahead?
Yeah, so you're absolutely right. There's been a lot of pain, particularly in microfinance. We've seen a lot of pain. And in microfinance, while I think the industry as well as Kotak has shrunk the book quite dramatically, we brought our book down by about 33% on an average basis year on year. Just on a smaller book, the pain will kind of reduce. But I think it'll take a little bit of time, maybe Q1, Q2, before we start seeing that pain kind of come down. Credit cards, I think, have plateaued and I think will get better. Personal loans are kind of really back down to a very acceptable level of loss rates.
Well, your credit cost for FY25 was around 60 basis point versus 40 basis point in the previous fiscal. How do you see credit cost in FY26?
So, Abhishek, based on the existing book, I think we'll see a better trend. And you can see it in our slippage numbers, right? For the last 2 quarters, our slippage numbers are coming down, which is a clear indication that losses will kind of come down as well. There are other stuff in the horizon, which we'll see how it plays out. But generally, I'm cautiously optimistic that credit costs will be better.
Any upgrade or more details on the digital front that you're planning for the bank?
Oh, definitely. As you know, Abhishek, we've launched a new app for Kotak Bank. We've launched a new app for our 811 customers. We've done a new platform for payments for our corporate customers. So a lot of stuff happening on digital. And that is something which I think we're going to drive really, really hard. Better digital capabilities for our customers and better digital capabilities for our colleagues. That's the thing that we're really going to drive because that's what I believe is how we're going to win.
Right, that's the word coming in from the top brass at Kotak. Just keep an eye out on Avenue Supermarts, though. That stock continues to underperform in today's trading session, and that's because the margins of the company in the fourth quarter disappointed the street. Revenues grew 17%, but that's something that was already in the price because the company had given their fourth quarter update, leaving the margins to analyst estimates. Analysts had expected anywhere between 1,020 to 1,050 crores. The company actually went ahead and reported EBITDA of close to around 955 crores itself, which implied a margin dip of nearly 100 basis points, and that's something that was weak. And as a result of which, the net profit also declined by 2.2%. Why is it that the margins were under pressure? The company said increased competitive intensity in FMCG has impacted gross margins. But beneath that as well, there has been a surge in the wages of entry-level positions due to high demand. This is something that we heard from Eternal's commentary as well, where they said that, availability of delivery staff for quick commerce was a problem, or it wasn't as easily available as expected earlier. They also are continuously investing in improving service levels, so that costs a little more. And they had a higher number of store openings during this quarter. In fact, all of last year, they added 50 stores, was about 40, 41 that they would do earlier annually. Gross margins, they believe, in matured metro towns will remain soft for a period of time, so dashing any hopes of further margin expansion from here on. And more importantly, on DMart Ready, which is their quick commerce vertical, they believe that business is growing extremely well in key metro times, but the profitability for standalone online segment could be some time away, and that has the street a little worried. The stock down about 3%. But the one thing is clear, Nigel, in quick commerce, while growth is coming by, profitability across the board because of competitive intensity is likely to be some time away. We've heard that from Eternal. We've heard that from, DMart Ready. Zepto is obviously not listed, so any commentary from them will be extremely crucial as well. And what happens with Swiggy is something that I'll be watching out for too. Swiggy, on the day Zomato shut its quick food delivery thing, actually put out a press release saying that their Bolt business is doing extremely well. The stock's spiked right now, but all eyes will be in what happens with Instamart. The profitability out there we'll be watching out for.
All right, Mangalam, thanks a lot for that. So not too great news coming in for DMart, but we have got some good news for you, and let's take you through that as we slip into a short break. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates. All of this at your fingertips. Download the CNBC-TV18 app now from the Google App Store, or in fact the Apple Store as well. Or you can simply just scan the QR code that's up for you on the screen. Welcome back. You're tuned into Chartbusters. Well, keep an eye out on the Nifty Bank. We just mentioned that one had moved into the green. It was up close to around 50 points and wham! In the last 5 minutes or so, it's suddenly given up close to around 200 points on the high point of the day, down 120 points. One would say par for the course though, because the other stocks in the Nifty are doing the heavy lifting. Talking about Nifty stocks, well, Mahindra & Mahindra, that's one will be reporting its numbers later today. Sudarshan joins us to run us through the expectations. Sud.
So in less than 1 hour, Mahindra & Mahindra will come out with its Q4 results, and we are expecting a strong set of earnings led by healthy volumes that company has reported for Q4. Both the auto volumes and tractor volumes were significantly higher. Auto volumes had surged 18%, tractor volumes were higher more than 23% in Q4. And even we are expecting realization to improve both sequentially and year on year on the back of the price hike that majority of the passenger vehicle companies had taken. Now, coming to the headline numbers, profit is seen rising 23%, revenue may increase by 20%, EBITDA too can increase by 26% to around 4,160 crore, and margin may expand to come around 14%, likely at 13.8% versus 13.1% in the same quarter last year. And realization may improve 1% year on year and 6% sequentially. And if you talk about both these segments, auto margin as per JP Morgan estimate is likely to come around 9% versus 8.8%, and even agri margin can improve and come around 17% versus 15.8%. But at the end, I would just mention there might be certain adjustments. Remember, for the agri business, there might be something related to impairment. Also, there might be adjustments related to electric vehicles. So while just looking at the numbers, keep an eye on adjustments as well.
Take that point, Sudarshan. Thank you so much for alerting us to what to keep an eye out on. You don't have to wait for too long. M&M numbers usually come around noon time itself. With that, what we'll do is wrap up on this edition of Chartbusters. You stay tuned to CNBC-TV18 as Trading Hour comes up next.